fortunate to have Thad Peterson. Oh, yes. And the event will be recorded, as somebody just said. So I think that's a disclaimer that we have to make, a disclosure we have to make. So anyway, we're very fortunate to have Thad Peterson as the moderator tonight. He's helped us out in the past and joined our events, and he's fabulous. And so with that, I think I'll pass it over to Thad and let him get started.
Hey, David, thanks so much. Yeah, I'm with IT Navarca Group. It's a pleasure to be here again. Ron Mazurski and I spent a few years together working, and it's great to be back. So we're here to talk about the payment facilitation space, and you know, putting it in a little bit of context, it used to be really simple. There were basically three kinds of products. There were credit cards, there were checks, and there was cash. And merchants were, you know, it was pretty easy. Then when merchants wanted to get a credit card paid for, they got a black box from an ISO, or even earlier than that, a knuckle buster. And then their processor would handle the transaction, and that was pretty much it. Then the internet showed up and the world changed. We went from mainline processors to payment gateways and mainline processors, which meant that we had parallel paths to the internet and to physical world POS, which was a bit confusing and difficult. People, please put your microphones on mute, please. And then we got to payment facilitation and payment facilitators, which is what we're talking about today. We started with PayPal and Square, and the payment facilitation space has become the star of the world of embedded finance. Our panelists are here to share their insights on the transformative impact of this technology, and it is truly transformative. We're going to talk a little bit about the future of acquiring, explore how this approach will shape traditional acquiring models, and talk about other things that are coming up that may change the world. So with that, I'd like to introduce our panel, starting with Caleb Avery of Tills.
Yeah, really appreciate you having me on today. My name is Caleb Avery. I'm the founder and CEO here at Tild. I started my career in the payment space by co-founding an ISO while I was in college. So started out going door to door selling payments. Over time, started consulting for software businesses. And that was really where I got my first introduction into the PayFac ecosystem, where one of the software companies that I was consulting with really thought that they wanted to go become a payment facilitator. And after a couple of months of educating them on what that actually meant for them to go become a registered PayFac, they pretty quickly decided that they had no interest in being a registered PayFac. But you know, those experiences for me really left me feeling like there was an opportunity to help more software companies leverage the benefits of the payment facilitator model without actually having to go through the regulatory and compliance process to become a PayFac. And so that's what inspired me to found Tild and what we call PayFac as a service.
Cool. Thanks, Caleb. Next, Bob Butler, who's the Chief Commercial Officer of PayFacs. Bob?
Yeah, I'm Bob Butler. I was the former president of PayFacs. It was a Brooklyn-founded payment facilitation infrastructure and really a PayFac as a service company. And we were acquired by WorldPay in 2021. I'm now Chief Commercial Officer, Head of Corporate Development for what is known as WorldPay for Platforms. WorldPay was one of the first big processors to actually take advantage of what was going on in payment facilitation. We were one of the PayFacs on WorldPay for a number of years, along with First Data and Wells Fargo, and it, you know, we went out to raise money in late 2021, and then they made us an offer because they saw what we were doing, especially in the PayFac as a service or managed PayFac space, and they really wanted to jump into it. And we were growing, you know, 150% each year. My career spans nearly 30 years. Primarily, I started in banking, got involved in the dot-com era in a bunch of little payment startups. Ended up working my way back into the processor world, and then you know, it said I'm leaving payments. I'm just going to go out and build homes in California, and I met the guys, Benny and Barak, who were the founders at PayFacs, and I really loved what they were putting together, and we ended up you know, really driving what we thought was a leadership role in the position, competing with the likes of Stripe and then ultimately Caleb and the team over there. But there were a couple of other players that were out there. I think we've done an amazing job, and obviously it was recognized by our folks, our friends at WorldPay. So really happy to be here tonight. Thank you, Thad. David, good to see you again and looking forward to the discussion.
Hey, Bob, there's no escaping payments. You should know that by now. We're stuck. And then Steve Roberts, co-founder and CEO of Autobooks.
Good evening, everyone. Thanks for having me. Yeah, I, like many of you, found my way into payments by accident. Had built a payment company in my youth on Fifth Third Processing Solutions, as many of you know, prior to Vantiv and of course the World Pay, and now here we are. So have been doing integrated straight through processing for a while. I, unlike Caleb, never really, I guess I was on the other side of the train tracks from the ISO acquiring side of the house. So as a technologist, really embraced that pretty early on, pretty excited about it then, and remain as excited about it today. So Autobooks is an integrated payment processing platform that goes to market directly through financial institutions, and we try to help banks and credit unions be able to offer PayFacs services for their many small businesses to make the acquiring and ability to get paid from the customers very easy. So look forward to sharing our experience doing that with you all today.
Thanks a lot, Steve. It's a really fun group of panelists because it's not straight up payment facilitation. There's a bunch of different flavors here, which makes it interesting. So, we've come a long way from the ISO world of selling a black box to a merchant. And we're now in a world of decentralized models where providers like you guys can offer unique services in a wide variety of payment forms and tender types. What were the factors that enabled this migration, and why are they important to merchants?
Yeah, I'm happy to start on that one. I think from my perspective, one of the key shifts that's happened, especially over the last 5 years or so, has been this transition to more software-led payments, where merchants are no longer just looking for a simple terminal to process transactions on the counter. They really want software to really enable their entire business to operate. And as more of these software companies started to look at the options available to embed payments, I think that's where the opportunity, for companies like Tild, companies like PayFacs really came into play, where the software companies were looking at the options that were available, to them at the time. Do we work with a Stripe and give away all the economics? Do we go work directly with one of the legacy processors and spend, pretty significant amount of upfront time and money to do that integration? Or do we think about going and becoming, a registered PayFac yourself? And I think the kind of pros and cons of all of those various decisions enabled the opportunity for more streamlined, easier, to bring to market solutions, like a Tild, to be able to, carve out space in the ecosystem.
Yeah, and I'll just follow up on what Caleb said. We almost always agree on all of these things, and I don't think we're going to be really different tonight. I mean, at the end of the day, small and mid-sized businesses have changed the way they acquire payment processing. So I was a small business owner in Palm Springs, had a little flooring business at one point, and didn't take credit cards, and somebody came by the door, knocked on the door. He had a little terminal. I bought the terminal for $500, and that's how I started taking payments. And that model worked for a long period of time. I mean, anybody that has worked in the ISO space, that is the game. And what we started seeing really in the last, call it 5-10 years, was small business owners started making most of their purchasing decisions from their technology provider, so software led. And what we're seeing is that is happening at a much more rapid scale. And instead of waiting for that guy to stop by or that gal to stop by and sell payment processing, they're buying it directly embedded within their solution. It really started back in the old integrated payments days, when point of sale vendors were partnering up with legacy processors. What we saw early on at PayFacs was, the guys who founded this were an ISO. They started losing business, family business, to solutions like Toast, who would basically come in there and payments came with. And so we use that as really the opportunity to build the platform so that we could make it super easy for software companies to actually be able to offer this product. And so, that's really where we saw a lot of the growth. And early on, when I first got involved in 2018, all the software companies were saying, we need to be a PayFac, we need to be a PayFac. And not unlike what Caleb's experienced is, once you got in there, they're like, yeah, we don't want to take risk, and we don't know how to underwrite, and we don't know how to do a lot of the things that people wanted to do. And so, you know, from that point of view, we saw a real market opportunity. A lot of people were going right only on infrastructure models, and we went left on really the PayFac as a service, but we still had the infrastructure model. And I think it worked out pretty well for all of us.
I'll offer just, you know, from an operating point of view, there's supply side and demand side. And from our vantage, again, we're generally trying to help financial institutions, you know, become or remain relevant for that next generation of digital customer. And a lot of it builds on what the guys have mentioned. At the lower end of the segment, again, and I know we're going to get on this a little later in your notes, Dad, but like the small and micro business is looking for simplicity, the ability to bundle a service. With all due respect, they're not able to navigate payments as crazy as we think it is. The mids, the tids, the lids, the shopping carts, the gateways, they just need a simple way to get paid from their customer and keep track kind of who's paid and who hasn't. And that applies for card present, that applies for card not present, shop card, everything in between. And, you know, at the lower end of the segment, they're increasingly digital savvy. They're increasingly looking for bundled solutions, embedded solutions that are easy and convenient and solve a lot of their problems, give them back time to go do what they're good at. From the supply side, from our vantage, the financial institutions were struggling because these digital savvy merchants were getting the products from what we'll call non-bank providers, i.e. Square and PayPal, and, you know, folks generally competing with financial institutions. And that began to slowly erode the deposit base, the non-interest service fee income, and what I'll call primacy, right? As those businesses are enriching their relationship with competing depository solutions or digital wallets, or, you know, pick your nomenclature, that slowly erodes, you know, the value proposition for what the next generation of banking looks like in years to come. So we came in and tried to understand those kind of dynamics and said, what if we provided an on-ramp at the lower end of the segment, leaning into, you know, what the guys mentioned, at the, we'll call it product led. So I just opened up a checking account and I want to bundle that checking account with a merchant account. Our words, not theirs. And let's make it easy to get paid. We make it easy to pay bills. Let's make it easy to bring money into your account and you know, abstract away the complexities and all that nomenclature. And that made sense. If we could do it very easily, who wouldn't want a checking account that can now also help you run your business? And then from the banker's point of view, there's a continuum, because they've got, you know, business, commercial bankers, and even the ISO folks. They generally want to spend their time looking at higher quality or higher calorie opportunities, if you will. In other words, Steve's Lawn Care and, a micro merchant that's doing photography for a side hustle or a solopreneur isn't probably where they want to spend their time. So how do you provide an on-ramp at the lower end of the segment, as much digital, as much self-service, as much product-led as possible, and then graduate those folks to a higher quality product with a higher quality relationship when, you know, the economics make sense for, you know, a more of a white glove approach to you know, graduate them into other products and services. So I'll leave it there, just, you know, kind of how we look at the world and how we're generally trying to help banks navigate this wild world of payments.
Yeah, it's a really interesting space, and it's, I think one of the things that you said, Steve, that's kind of implied there is that the merchants have gotten a bit ahead of the banks in technology, and they're asking for stuff that the mainline bank can't necessarily offer or even speak intelligently about in some cases. But you know, if you guys were going in and talking to a merchant or an ISV or one of those guys, and you're talking about your model as payments as a service, how would you position it against traditional processing in terms of benefits, and why is it better?
Well, I'll take a crack at this. You know, at the end of the day, it's all about and really at a high level, it's all about the customer experience and making sure that's a smooth, frictionless customer experience. You know, what we've seen is an embedded solution, you know, whether it's coming through Steve's kind of organization or whether it's coming through a vertical software, it's all about a solution that speeds the time to market, that customer can take payments, accelerating data flow, improving customer experience for the platform, basically because they're managing all these relationships and ultimately what the customer is seeing. So, you know, in a more traditional model, and I'm now part of a more traditional processing company.
You got
What I
to be
would say
careful,
is,
Bob.
yeah, I know, I need to. What I would say, we were able to really get this data flowing and really improve the overall customer experience to that end merchant. Yeah, at least that's from our side. I don't know what Caleb or Steve see.
Yeah, I'd say from my perspective, there's a couple of key benefits. You know, when you look at just the merchant onboarding process in general, let's talk through two different experiences. So, you know, for a software company that wants to go onboard a downstream merchant, would you prefer to email out a PDF application for them to print, sign, scan, send back with driver's license, voided check, you know, processing statements, and hey, we'll get back to you in a couple of days, you know, when you're ready to start processing? Or would you prefer a fully digital, you know, white label experience, the application's pre-populated with information that you've already given to that software company to onboard into their core experience? You click to agree to terms and conditions, you're not uploading supporting documentation, and lo and behold, you know, 90 seconds later, you're able to start processing payments on that platform. Those are obviously two wildly different, you know, experiences. And you can imagine the advantage for software companies when they're really focused on that customer experience. And the same thing can be true for the technical integration, the payment experience, the reporting capabilities, support. But I think onboarding is really that kind of first lens into that payment experience for the merchant who's wanting to take advantage of that software platform. And that's certainly a major advantage, you know, with us. And I imagine kind of same experience with PayFacs.
Well said. Caleb nailed it. You know, just in our world, go to the alternatives. You can go to a bank's website and say, I want to process payments, and call this 800 number and go through that laborious experience. Hopefully they call you back. Hopefully they send you the forms. Hopefully you get approved. And that's time consuming, when the alternative, as Caleb articulated quite accurately in our experience, where I can log into digital banking, send an invoice, accept a payment. We already know who you are. You're already authenticated. The bank's got a relationship with you. We've already been through KYC, KYB, OFAC. We can now look at your depository trends. We understand your, you know, historical velocity, and we can instantly approve you, and you can literally send your customer an invoice and accept that payment within seconds. You know, so just, you know, in a software construct, with the customer experience being paramount, there's no going back.
Yeah, and the only thing I would add to that is, even when a software company in the old integrated payments model is using a processor and they have a software hardware provider, let's think of a point of sale system or something like that. Right now, when that customer has a problem, they don't know who to call. And in the PayFac as a service or the PayFac model, they call their software partner. And we sort of, at least at PayRex, we're invisible in the background. And I'm sure it's very similar to Tilt. I mean, we want the software partner, the software customer to really own their branded experience. So we think that's super important. We think that's, you know, and at the end of the day, what Caleb talked about was like, that's how we expect as consumers everything to work. We don't expect it to, you know, and most new business owners are, you know, millennials, Gen Zers, they don't expect any of this to cause friction. So yeah, it's a huge thing.
Yeah, friction is failure in this business, and the more we get technologically advanced in this stuff, the less friction there is. You know, generally, I think the perception about PayFacs is it's good for small to mid-sized businesses, but is there a role for PayFac at the enterprise level?
I mean, I would say absolutely. You know, for us, you know, we support you know, ERP platforms that have, you know, businesses doing, you know, millions a month in transactions, and so there's a kind of wide variety of use cases. And the way that I think about it is, it's not even necessarily that the kind of PayFac model in and of itself is what's providing all of that value the enterprise merchants. It's the holistic experience. And a lot of it was, what Bob was just, articulating, where it's not just about, the speed to onboard, that merchant account for, a multi-million a month business. Onboarding them and approving them in 90 seconds isn't necessarily, of value to that client, especially if they've got to go through a complex, integration of the software platform. But having, a fully digital experience, having that single point of contact, to their software company, the fully embedded reporting experience, access to metadata and webhooks, and a lot of the kind of ancillary capabilities that we bring to the table on top of, that rapid onboarding experience, in my mind, is really where we're seeing a lot of the value for, our larger, enterprise customers that are coming, to us. And so it's really about the entire experience more than necessarily just the onboarding experience itself.
Yeah, and what I would say is, I mean, at the end of the day, the history of PayFacs started with the likes of PayPal, Square, and now in Stripe. I mean, you wouldn't consider those companies SMBs, but the way that we view it is we've always looked at it, and this goes Payrix now into WorldPay. We look at this as an SMB acquisition model. Like, at the end of the day, we're trying to acquire small and mid-sized businesses, and we think it's exceptionally well suited for that model. I do think for some larger customers, just depends on how you define enterprise. I don't think PayFac makes sense for Kroger, American Airlines, and others. But there are large companies that, we have software platforms that have customers doing $50 million, $60 million, $100 million a year as an individual merchant. So it's not like we haven't seen it. But again, I don't think some of the benefits, especially that Caleb and Steve articulated, which is that onboarding, doesn't really apply to some of the larger enterprise customers. At least that's our approach. Mm-hmm. Steve, I don't know what you think.
To be honest with you, you guys have more experience, kind of supporting a diversity of vertically integrated, sometimes corporates and mid-markets. I'll be honest, our experience is generally at the lower end of the segment. There's exceptions, but for that, they're just exceptions, whether it's a municipality or a school district. Sometimes we'll find an oil and gas or maybe a tool and die. But to your point, it's less about a PayFac and it's more about just a simplicity where they don't, necessarily have corporate resources or financial domain expertise to navigate and do a vendor selection. They just kind of want a path of least resistance. I just got this P card payment from, Boeing or some large corporate, and I just want to take this PAN and deposit the funds in my account. Like, they call their bank, and in that case, the bank just wants to be there to provide them a lightweight solution. Doesn't necessarily mean it has to be a PayFac. It just has to be a simple, convenient one for the end user.
Yeah, cool. PayFacs have been kind of the bright shining object for a couple of years, but now there's a new thing called payment orchestration out there. How is payment orchestration different from PayFac, or is it?
I'll take a stab at that one. I think the term is still, maybe in some circles being defined, or maybe there's slightly different interpretations of how to answer that question. But from my vantage, payment orchestration is, maybe a modern take to what the guys mentioned, years ago, where you had ubiquitous experiences from, offline to online, card present to card not present, all these standardization relative to one system. Take that into today's kind of modern lens, and I'll use an example where maybe, let's pick on push to debit. Maybe the business needs to get paid quickly, but the payer might be coming from an alternate rail. So there are, in my view of payment orchestration, kind of a multi-rail, more than just a least cost routing, but more of like an opportunity to say, I'm going to take an input from rail A, and I'm going to, optimize for the outcome that the customer is looking to have. In this case, we could step in, take an ACH payment, basically move it to a push to debit, transaction. So they get their money right in their account. They don't have to wait. Maybe it's a Saturday night, you miss batch cutoff. You wouldn't get your money until maybe Tuesday under, normal situations. Mm-hmm. We can, potentially facilitate, getting those funds to the user faster. There's a lot more sophisticated use cases, I think, that, could be bundled under this payment orchestration, whether it's, remittance or straight through processing or reconciliation. But in its simplest form, I think it's just lending some additional sophistication, layer in some rules engines in the sense that, I want certain payments to behave under certain terms, certain workflows. Maybe there's a dual signature or some, approval process. But, that's where I've seen, the payment orchestration find its way into the conversation. But I'd be curious what the guys have to say.
I mean, from my point of view, first off, I'll say I'm not a payment orchestration expert, but it does seem to be a buzzword that's being thrown around a lot in the space. I think a couple of gateways have actually used that word because they wanted to sound a little bit higher end. But at the end of the day, we view payment orchestration as when a merchant can really control who's on the back end of controlling that payment. And in the PayFac space or PayFac as a service space, we are starting to see a couple of new entrants that are looking to orchestrate on behalf of different PayFac as a service backends. So take Stripe payments and run them over to Payrix, take Payrix payments and run them over to Tild. We're starting to see that, and there's a couple of new players out there that are actually orchestrating PayFac type payments on the back end and making it invisible for the merchant on the front end. But that's nascent. It's relatively new, and we have not yet seen it work at scale. So I'd be interested to hear what Caleb has to say.
Yeah, I would probably add a similar disclaimer to Bob. Not a kind of payments orchestration expert. I think from my perspective, when I've seen payment orchestration really be effective has been for much larger merchants that really have the sophistication to manage the ability to manage complex payment flows. And I think to Bob's point, you're starting to see it creep into the ISV and software landscape, but it really is not a prominent part of the conversation today. I think from my perspective, there's a couple different lenses there, where one is that idea of least cost routing or routing to multiple acquirers and having that flexibility. I also think about it in the sense of, a kind of one-to-many integration where you have a single partner that can connect you to different acquirers, different payment methods, different alternate payment solutions. And I think from that perspective, we are seeing interest, from ISVs wanting to have flexibility of multiple acquirers on the back end, multiple sponsor banks, the ability to accept ACH, Apple Pay, potentially crypto, FedNow, all sorts of different payment methods. And so I think we're starting to see some of those requests creep in, but it's still really early, especially in the ISV category.
Yeah, we just did some research on it, and the idea of connecting several different paths to payment into a merchant is getting a lot of attention because it makes so much sense, particularly if you're dealing with a bunch of different kinds of payment types, be it cross-border or whatever, or you just want to have a fail-safe method so that you can move from one to another very quickly. And it seems to me that there's the potential that payment facilitation and payment orchestration could actually end up kind of being the same thing, being an integrated component that one drives the menu, the other drives the process. So it's going to be really interesting to see how that evolves.
I also think we're going to start seeing people want to have multiple, even smaller merchants. I mean, especially given in light of what happened with SVB, just being able to sort of spread out the back ends. I know when I was running Payrix, one of the things we did was we were tied to one back end, and I got us tied to a different back end. So I'm WorldPay on one side, I got First Data, Wells on the other side, and the main reason we did that was just really to diversify the risk of using one ultimate backend processor.
Yeah, I think that's a powerful point given the experience of the past couple of weeks. A lot of companies have lost a lot of sleep over the last few weeks, and I think that's going to change the decisioning in the short term for sure. There's a new technology that's hitting the streets now, soft POS, which is essentially a digital version of a POS terminal that lives on a smartphone. One of the things that's kind of interesting there is because it is a piece of software that can live on a smartphone, it's not going to be that big a deal for a completely digital merchant to move into physical world POS just by embedding software into another tool. What's your take on soft POS and how it might impact the payment acceptance space?
I can tell you, I'm super bullish on it. I think for us, especially some of the verticals, that we service, like I'll take field services as an example where, for a lot of the field services folks, that we service today, they've struggled to really get, their client base to adopt a, $300, terminal that they have to lug around and figure out how to get it connected, to the internet. That's just not the experience that these guys really want to drive in the business. It also introduces a lot of, support costs and deployment costs and headaches, which, Bob's not nodding his head. And anyone who's been involved in the distribution and support of physical terminals knows the joy, that is. And for a lot of ISVs, they're really hesitant to get into, that experience. But at the same time, they don't want to say no to what could be 70-80% of the payment volume, for their downstream customers. I think, soft POS has the ability to really solve for a lot of those pain points, for both, providers in our, seat, as well as for the ISVs and the merchants themselves, just making it much, much easier for these software companies to be able to capture that volume and capture those payments.
I'm super bullish as well. I think, my personal opinion is soft POS is going to expand. It's going to expand fast. And really this whole, to me, I think ultimately, and again, this is a personal opinion, not a corporate opinion. I think this blending of card present and card not present, it's going to be merged into one solution, and it's not going to even, we're not going to think of it the same way we did, let's call it 5, 10, 15, 20 years ago. That's my opinion. I mean, I think ultimately, and the card brands will have to catch up with their schemes and their fees, because it is going to rapidly change the industry. And to the point that Caleb just mentioned, we've done a lot of card present, card not present software partners where we've used both, but just the deployment of terminals, the management of terminals, even if it's just a small device like a BB POS kind of device, we're not talking anything super sophisticated. It's still not an easy thing to especially for a software company that's basically a lawn care software business. Their whole approach is wanting to get the payments driven there, but they don't want to manage equipment deployments and then handle customer service issues as it relates to those machines. So I think soft POS is coming. It's going to be hot, and I'm super bullish on it.
That's 3 for 3. I'll echo the guy's sentiment. I'm happy to say, although I can't publish a press release on this, but we're in friend DA company here, right, everybody?
On a recorded yeah. Webinar, definitely friend DA territory.
It's all right. We're actually pretty far down this path ourselves. So imagine a world where just like remote deposit capture, I'm a merchant in the field, my customer hands me a check, I take a picture, funds settle into my bank account. The example now, I'm that same merchant, my customer hands me a card, I log into my digital banking provider, accept the payment, instant device provisioning, instant merchant onboarding. I take the card. Does that look right? Here's your receipt, and off you go. No hardware, no concept of a merchant account. It's just part of your standard business checking account. We just completed level 3 certification. This will be very public very soon, and we couldn't be more excited about it. So I think we're just in the very, very early innings of understanding how quick and how beneficial this will be. So we talked about the merchant case. Imagine now I'm Steve, the consumer that is having a garage sale, and Bob wants to buy my old vintage record player, but Bob doesn't have any cash on him. I, as a consumer in a maybe not so distant future, can log into my bank and basically instantly, again, provision that device, take Bob's credit card, and now you start opening up use cases for P2P and A to A, account to account, over a card rail. Card brands benefit, banks benefit, service fee, non-interest income, and the consumer benefits because guess what? Bob has a credit card as wallet. Bob might use Zelle. I don't have Zelle. Caleb might use Venmo. I don't have Venmo. And we start getting into these debates over what medium and tool and service provider we have. Well, my bank doesn't support it. Guess what? Everybody has a credit card. Everybody has a debit card. And if it's convenience with good customer user experiences, we're going to see the beginning of a whole new paradigm.
Yeah, I completely agree with all three of you guys. I think it's a game changer. I think it's going to revolutionize the concept of payment acceptance because it's software. It can go anywhere. It can go into a car. It can go into an electric vehicle charging station. It can go into a consumer's, as you said, Steve, into a consumer's own personal account to accept payments. And congratulations on getting to level 3 certification. That's huge.
We've done it with 2 processors already. Wink, wink,
Excellent.
wink.
Good job. Good. Yeah, it's going to be, I can't wait to see how that rolls out. And then the other thing that's so interesting to me is if I go into a store and make a payment with a QR code, it's card not present. But if I do this on SoftPOS, it's card present. That can't last. You know, the networks have been getting away with this for a really, really long time. And it's not going to survive this transition, I don't think. I think it's time for card present and card not present to go away. Then I don't work for the networks, so what do I know? So, you know, you guys are all about embedding payments in other applications and for a whole bunch of different use cases, ranging from integrating with business management software to one-click purchasing out of a social media feed. How do you see the ecosystem evolving with regard to embedded payments going forward?
Steve, you want to take one first this time?
Yeah, so I think, you know, I think we're probably pretty aligned. I think we all see software and embedded payments continuing to just be more ubiquitous, for a lack of better words. And it starts with customer experiences. Again, I'm a software guy, so product led. Like, how do you lower the barrier of entry to make it just super simple to get access to the benefit of card acceptance, which is generally a medium with which to get paid, right? So now I'm helping my receivables, I'm compressing my day sales outstanding, I'm giving my customers more convenient ways to pay me. There's just a whole bunch of things that help the business benefit from that, and the more dynamic and available that is through my service provider, my financial institution. You know, there's just so many ways that we're all quick to cite the Uber experience, right? Like, you don't think about commerce when you're getting in and out of that experience. I would say Airbnb, very similar, right? I now can shop for, use, and it just slips into the background, which is, I think, really a wonderful user experience. So I don't think I've got really a profound point of view. I think it's just a further extension on what we're already kind of talking about, which is payments slipping into the background. Nobody really cares about the processor, the gateway, the terminal IDs, the mid, the like, that's all jargon we've created as an industry to make it difficult. Customers want benefits and value and outcomes. Let's give the people what they want.
Yeah, I mean, I think obviously, you know, embedded payments, embedded fintech, really, the way that I see that, it's just going to continue to grow. I mean, you're going to have the instant payments and the one-click payments and all of those things, but anything that creates less friction is going to be the modus operandi going forward. And you know, we've got a theory. And, you know, we've dedicated a lot of investment to embedded fintech, which not only includes payments, it's going to include provision of capital, card issuing, payroll, banking, insurance. You start to think about how the small business or small SMB is going to be buying different products and services. The folks who can get that to them the quickest in the most frictionless fashion are going to be the winners. And it also provides for our, you know, our vertical software partners and even our horizontal software partners. It provides an opportunity to expand their revenue from just, you know, SaaS 1.0 is you're getting a license fee, and SaaS 2.0 you're getting license fee and revenue, payments revenue. But we really see what we call SaaS 3.0, which is all of the other fintech financial services and products that you can have out there. So So I still think we're in maybe the top of the second inning in all of what's going on. I do not think we've got a long way to go, and we, and I'll just speak for us, like, March last year to March this year, I saw the dashboard, volumes up 178%, same period last year. Transactions in the 300% range. That's the kind of growth that you're seeing, and it's coming through these embedded applications.
Wow. Yeah, Bob, Steve, definitely agree with both of those points. I think, we certainly see a lot of value in embedded finance, more generally. I would say, just to kind of go down a different perspective, I think for me, and I think Bob would certainly agree with this, software-led payments is a trend that's only accelerating, in the space. And I think for me personally, one of the things that I'm excited about and paying a lot of attention to is how the traditional players, the ISOs and the traditional acquirers, are responding to what's really a threat and an opportunity, for them, where, my personal point of view is that, ISOs are going to struggle, 5 years from now, if you're still operating in that, feet on the street, door-to-door model, selling unintegrated payments. You're going to have a really hard time carving out, a successful, business in that space. But what we're seeing is more and more of these ISOs thinking ahead and thinking about how they can get involved in software-led payments and being more active, targeting ISVs and getting relationships, with integrated processing solutions. And so I think you're going to see that shift, from the ISO channel, and then you're going to see the traditional acquirers really figuring out, buy, build, partner, as FIS, and WorldPay did with PayRix, really thinking through, what their strategy is for, software-led and embedded payments, because they have to figure out, the answer to that question, today, or risk, being left behind.
Yeah, so they really have to have a PayFac answer, if you will, to compete going forward, is what I'm hearing, right?
Well,
I think
it's
so.
funny because I remember I had a conversation with Evo, and I was saying, guys, you should really, and this was early days at PayRix, and they were a sponsor on or they were the processor on the ISO that we had. And they're like, we are out of we don't want anything to do with PayFac. They didn't like the idea, they didn't like the name, and we all know what's happening to Evo. Evo is now going to be a part of global, and I think all of the legacy processors have to seriously look at this. WorldPay of FIS, I mean, yeah, they got us, but I think they got us after we got some of their customers, and it made a lot of sense. And so I think part of it's a defensive play and part of it's an offensive play. I mean, I think it makes a ton of sense for the largest processor in the world to really own this particular space as the world is shifting. And so I think that's a lot of why it made sense for WorldPay. And we're expanding we're already in Australia, and we're going into Europe and the UK, Canada. And I think this model is only going to be further pushed as the US was the first to really grab on to the PayFac model. But I can tell you it's expanding on a global basis. And I really think at the end of the day, that's what it made sense for FIS WorldPay. But I think everybody's going to have something in this space.
I agree. Yeah, PayFacs are expanding all over the world. We're seeing people in Europe and Asia Pacific building these things and getting them out there as quickly as they possibly can, simply because it makes sense. To circle back to the U.S. for one kind of provincial question, a couple months from now, FedNow is going to come out of the Federal Reserve as a real-time payment solution. We also have the TCH real-time product. You have FedNow, you have push to debit. How do you think merchants are going to use the real-time payments, and do they create any issues for you guys?
I'll try to start. I think it's to be determined. With all due respect, there's a lot of excitement about it. You can't deny it. And the concept of getting paid quickly and cheaply with, no irrevocability, there's definitely merit to it. But I think what I'm curious to see get solved is not unlike crypto, which is the on and off ramps, right? If like the on ramp has to be through a very specific relationship you have with a provider of said service, as well as the off ramp, it's going to affect adoption and its mainstream applicability. So again, the concept makes sense. The devil's in the details relative to its implementation, and I think that in cooperation with Durbin 2 and other attempts to reduce interchange and give optionality, and you're seeing like JPM with their WePay acquisition and their card acquiring create like closed loop ecosystems, not unlike what Square and others have done. I think there's a lot of different versions of what the future might have in store, and I think how PayFac fits into that is not perfectly clear, but because of the software orientation, because of the embedded nature, I think we're maybe a little bit positioned to benefit. Cards, the concept of the card rails, the ability to transact over a debit or credit rail, and the convenience that it provides consumers is I don't see that materially being affected in the near term. We'll probably get to zooming out a little bit longer term in a follow-up question, but I'll be curious what the guys think.
Yeah, I think from my perspective, there's certainly an opportunity. I think to your point, it remains to be seen exactly how it's implemented, and if it really solves for all of the pain points that the folks have, today, where, like we've got in a lot of B2B applications, ACH can end up being the predominant method, that customers are paying today. And there's some obvious challenges, with ACH. And so the idea of kind of cheap, fast, money movement certainly has applications. I tend to think about it as something that could be an opportunity, for providers like ourselves, where we, to your point, can provide that technology layer and the ability to get access to, that as a payment method embedded within, the broader experience, where reporting's fully integrated, the integration's fully integrated. And so I don't really think about it, from a threat perspective. I think it's a potential opportunity, but there's still a lot to be seen, whether it's something that really actually drives mass adoption, despite all the excitement.
Yeah, and I agree with both the guys on the panel tonight, because quite frankly, I think it's early days. PayFacs are going to rise to the occasion. They're going to provide whatever level of service is required. We always have an issue, like, there's obviously issues with ACH payments but we still need to, this thing, the devil is, I like what Steve said, the devil's in the details. Like who's gonna, like, that payment, super cheap, large dollar, what if that, what if the products weren't delivered? I mean, there's so many things that can go wrong with a non-card backed payment. And again, I am all about, improving commerce flow, but there's risk in everything. And depending on, how much risk a PayFac wants to take, they'll have to consider all of these different applications that come out there. But bottom line, PayFacs are going to participate as the rest of the industry requires. It's just, but I think it's still early, especially with FedNow.
Yeah, no recourse is kind of a big deal. It's going to be interesting to see how they deal with that. We have a few minutes left. I want to save some time for questions from the audience. So I've got one final question for you guys. 5 years from now, what do you think the payments acceptance space is going to look like?
Yeah, my personal point of view, kind of to what I said earlier, I think you see, software-led payments being the dominant way that SMBs are acquiring access to payment technology. And so order of magnitude, I think that's something like 20% of payment acceptance today. I think you see that being, north of 50%, 5 years from now, which obviously has a lot of implications for the broader payment space.
Yeah, I just to piggyback on that, I think most SMBs are going to be making their purchasing decisions for payments and other financial services through their technology provider, not necessarily through their bank. I think payment acceptance is going to continue to be more seamless and more invisible, to the point that we made earlier. I also think that the intelligent use of data and AI is going to become a major differentiator for processors. And I don't know what exactly that looks like, but I can tell you it's going to be a big deal. I also think in 5 years, as it relates to cards, Gen Z and the Gen after it, they're not going to ever even carry cards. I think the thought process around cards, that plastic that we have is almost going to start to disappear. And as I mentioned earlier, there's going to be little, if no differentiation between card present and card not present. I think it's going to all come together, and the card brands are going to have to step up on that.
Echo more software. I would argue mobile is only going to continue to thrive. Think of yourself, the Amazon experience is really good. You don't have to enter card information. The digital wallet experience is getting better, and Apple is going to continue, in my opinion, to grow in significance. The ability to use Apple Pay and cards on file. And the last thing I'll share, just in terms of the millennials, I was getting my hair cut, and I hand the woman my card, and she says, "Oh, you got an old-fashioned card." And I'm like, it wasn't that long ago. EMV and chip was modern, but she was looking for the tap to pay. She's tapping my card on the terminal, and I didn't have a tap to pay enabled card. So my point is as younger people, the card is increasingly dead. The software, intuitive experiences, she would like nothing more than to just have my card on file inside of in their management reservation system, and just says you're all set. How much you want for your tip, and go away. So more software, more mobile, more convenience. Again, embedded is what we're going to see. Our kids will not carry cards.
It's interesting. I've said for a while that Star Trek was actually the end state for payments, because clearly people own stuff, clearly people buy stuff, but you never see people pay for stuff. And I kind of think that that's the vision of the future. It's just going to happen, and it's going to be a whole bunch more than Uber. It's going to be everywhere. Thanks so much, you guys. With that, David, can you pull up some questions from the audience?
Oh, sure. So we got a question from, we got one question that seemed to have been answered about MCCs and the rules for the size of a submersion. But here's one from Lou Morsberger. Would it be correct to say that that credit risk management, historically the most critical value add, is now commoditized, in parens, available from numerous players in the background, and close parens, while the processing technology in all of its configurations is now the differentiator?
I'll take a stab at that question, and I would say that there is a lot of credit risk management. There are a lot of tools out there, but at the end of the day, I think what separates some players, especially in our space, the space that Caleb and I play in, is the ability to be able to service a lot of small and mid-sized businesses and manage that credit risk. And that's a bunch of different tools that we tap into on the back end. And we have our own engine that actually does that. And so to me, it's the credit risk management and the ability to do all of the embedded nature of the payment process flow, all that. To me, it's all in one. And I can tell you the differentiator for us while we were, when we were getting PayFacs going, was that our risk management team. It was being able to onboard customers quickly and seamlessly and build the tools to make that happen. We couldn't buy that off the shelf. We had to build that. And, I wish we could have bought it off the shelf. It doesn't exist that I've seen in the applications that we want.
Just the underwriting you're talking about. Yeah, carry on.
I would tend to agree with that, where, I think it's one thing if you are, a singular, vertical that has a very specific MCC code, a very specific, credit profile. But, one, from our vantage point, we see a wide variety of different vertical use cases. And even within a single ISV, they could serve 15 different MCC codes and have different average ticket, different high ticket. And that's where it starts to get, much more complicated. And so I still feel like there's definitely a level of differentiation there. I would also add that it's a combination of not just the ability to manage the credit and the risk, but having the proper, tool set and risk models in place to actually be able to offer an instant underwriting, capability. It's one thing to be able to make the correct, credit decisions, but if that takes you 2 days, versus, having the right rules and, tools in place to be able to do that decisioning in, 2 or 3 minutes, that's still a major differentiator on top of the, processing technology and configuration.
Same for us. We had to custom build everything, transaction monitoring, underwriting, risk management, velocity. There's no silver bullet on that. And, you'll see in times of challenge. I mean, Zell's got challenges, the car brands during the holiday seasons, trying to do things horizontally to Caleb and Bob's point. It really is not easy. And as a PayFac, you ultimately are the single throat to choke, being liable until a world where you can pass that indemnification or liability on, or maybe shift liability to the issuer, like in an EMV or tokenized world. So I think we all would like to see a world where we don't have to take on as much risk and make payments even that much more ubiquitous. But until that comes, it's still a pretty critical part of the equation.
And we got a few minutes just before we go to the breakout sessions. There's a great question from Drew Edmond. The question is, how do providers serving payment facilitators and platforms differentiate themselves over the next few years?
Yeah, that's a fun question. I think for me personally, when I started looking to build out Tilled, whatever it was, a little over 4 years ago, one of the biggest differentiators was time to market. When we were looking at a lot of the existing solutions that were available, you were talking 3, 6, 9+ months, to get, a customer live, where, we've launched, I don't know, 18, 19 platforms so far this year, and the average time to integrate was 9 days. And so, the ability to actually say, you can get somebody live, in sub 2 weeks of technical integration, I think is a major differentiator. I think, one of the things that, Bob touched on earlier in the conversation was this idea of geographic expansion. I certainly feel like that would be an area where you guys have, an advantage on us with the ownership at FIS WorldPay. But I certainly see, opportunities that we just don't have the capacity to win the deals, because we don't have, the ability to serve, all of the verticals. And so, especially when you're talking about companies that are at that enterprise registered PayFac scale, I think increasingly more and more of those customers doing 2, 3, 5+ billion in volume are expanding, internationally, and they'd prefer to have a single platform, that they can work with that serves them in all of those geographies.
What I would say is, geo expansion, embedded fintech, other products and services, and being able to be that sort of conduit to the PayFacs and to ultimately their customers. And again, we're in early days around that. But really, at the end of the day, I think if you always think about the customer, the end customer, that small merchant or that customer of that software partner, how do we make this whole entire process more seamless and easy to use? And that comes down to data. And I really believe that data and AI and being able to help our partners, our platforms, payment facilitators, and software platforms, being able to use that data in a consumable fashion. I mean, the card brands have had data on everybody forever, and I've never seen really consumable data that can help a small business really grow their business. And I think I think that's one of the things that's going to really differentiate some of the players out there.
It's all on the revenue side of the P&L, not so much the expense.
Exactly. Well, to me, that's how I always look at it. Because what I think is important is not really what's important ultimately to the customer. And I think if we're always put the customer first and the ultimate customer and build the product around it, you can't lose. I think, the big challenge with sort of, what legacy processors have had to go through is, they're monoliths, and they you know, and they were the gatekeepers for a number of years. And what some of the smaller players out there have been able to do is come out there and take market share, and significant market share. And it's strictly because of these software solutions.
Yeah, maybe just to put a bookend on it, we're biased, and our job is to commoditize it as quickly as possible for the benefit of the financial institution. They could draft off of the relationship they already have with their business. So in other words, they could get the product they're looking for from a relationship they already have, and they don't need to leave the bank to go get it from someone else. You know, it's kind of as simple as that. So the relationship, the experience, everything the guys are saying, but you know, with all due respect, the differentiation is going to, you know, unless you're looking for some specialized, vertically integrated software unique to your needs, you know, our job would be to help financial institutions add it to the menu of benefits that they can help small businesses with, particularly the less sophisticated ones that just need the outcome without all the ceremony.
Mm-hmm. Well, I'd like to thank everyone for making this such a wonderful panel today. And if you can get some time to stick around for the next few minutes, we'll have small breakout sessions where we'll get a chance to speak directly to folks who are taking part. So much appreciated. And then Bill or Nikki, if you will start sending the people into the breakout sessions.
Okay, stand by.